history of the world, you can see that the global monetary policy changes roughly every 50 years or so. And right, the last time that we changed, of course, was into the petrodollar, where we got off the gold standard. But at this point right now, we're trying to do something better, because every time we change it, we think we're going to make it better. We think we're going to be more efficient. We think we're going to produce more commerce and greater economies. And to a sense, we mostly have. We mostly got it right. But some of this stuff doesn't scale, and gold just did not end up scaling to what we really needed to be. There was just a mountain of derivatives that was created over the top of it that allowed, the central authority to take control anyway, right? So, at the end of the day, like Trey said, you really have to look at the scoreboard and see where we are in time. And where we are in time is Bitcoin is slowly but surely kind of eating the world. Just like, Mark Andreessen, I think his name is, tried to say that software is eating the world, right? The creator of Netscape. Software is eating the world, where everything will be available on your phone, everything will be turned into software. Even hardware devices, for example, in the music industry, like synthesizers and stuff, all being turned into software, all being commoditized, available for all. And so really, Bitcoin is a part of this huge movement that we're on to democratize information, to democratize everything that we can, so that we can live in really the most fairest planet that we've ever had the opportunity to live in. So this is really, really big. And when I look at the price, I do look at the price all the time, of course, right? Because it's fun. It really, if you could look at the price of the internet every day, you probably would have. You probably would have seen, what is the price of the internet today, now that AOL, went out of business, right? So we have certain measurements we can do. We can measure the economy of the internet, right? The multi-billion-dollar economy. But at the end of the day, now that we have Bitcoin, we are going to give the entire world, the opportunity to have a stake in it, to be able to purchase a piece of it. And that has never before been able to be possible. Never before could any person, just doesn't matter where your country are, be able to have access to this global liquid financial system. And not only a global liquid financial system, maybe like the United States, but this is the global financial system that will power economies for the next 1,000 years and beyond. So it's really big really important to look at the big picture and to not see these little tiny, worry about these, these little price movements, because there is something called moving averages, and there is something that was coined called, the Mayer multiple, that was kind of named after Trace's calculation, where we just look at the 200-day moving average. Really, we take a look at that and we see that kind of removes all the noise, and we can see how the actual price is doing. And when we see this, we can see that just Bitcoin slowly goes up and up and up and up, and so over time, as it gains more utility, as more people learn about it. So I'm really excited about the future of it, and I really couldn't care less about these little tiny daily price movements when you look back at the technology and the amount of work that programmers are doing every single day, volunteering their time. We're talking about years of volunteering, no paycheck, right, just for the passion. And this is what they produce, this open source community, this open source ethos. I couldn't be more proud to be in this community, so very awesome.
Now, Andy mentioned it a little bit about the scaling debate. We recently had a problem in Bitcoin where there were too many transactions, and when there's too many transactions, the cost of each transaction went up. So if you were paying someone in Bitcoin, you'd pay maybe 30 cents, then soon you're paying $3 or even $5, and people thought that was a mistake. So there became a split of two ways to solve this solution. One way was just to make the blocks bigger, so you could do more transactions at the same time. The other way is called like a layer 2 solution with segregated witness and the Lightning Network. So we'd just like to go down the panel. Let's start this time all the way at the end with the Vortex. What did you think about the scaling debate, just as a scientific debate? Do you think the big block solution would work, or do you think the layer 2 solution would work?
So there's been now, because this debate's been going on for years, we've actually been able to do a little bit of testing, right? We've been able to see a few things, and it was proposed that there was several solutions proposed, and we actually ended up trying a few of them. And the biggest one was SegWit, and that was just going to at first be a little bit difficult, because we were thinking it was only going to be a hard fork, so it may be very difficult to find consensus.
And Jeff, what does a hard fork mean?
Yeah, and so a hard fork is when you actually split the network, so you have a program where you actually split it in two. Somebody takes the code and they move over to a different project and do something different. And so that's kind of what ended up happening, where we had one choice of using SegWit, this technology called SegWit, that really, over time, over the course of like a year or two, became more and more probable, became more and more looking like the best solution, because we can actually do something called a soft fork. And what that means is that we can actually upgrade the network without removing anybody from the past. So that means it's backwards compatible. This network, this software, this Bitcoin is backwards compatible all the way back to 9 years ago when it first was released. So that means that you never have to upgrade to spend your coins. So your coins from many years ago would still work, and that's really important for Bitcoin to keep this sense of backwards compatibility. And so the scaling debate was kind of a big debate between that, right? Do we break this line that we've had for 9+ years, and try to move to something else, or do we continue this and try to keep this network afloat? Because if you fork the network, then you have two networks, and we were really trying to keep this as one unified network. And there was a split, and we've seen that community now split off into something else, Bitcoin Cash and various ideas like that. But at the end of the day, everybody is like Trey said, keeping score. Everybody is looking at the amount of transactions that's happening, the amount of economy, the amount of commerce that's happening over the networks. And what we're finding now is there's literally now more SegWit transactions than there are Bitcoin Cash transactions, the opposing fork. So over time, I think we're going to see more and more people adopt SegWit, more and more companies adopt SegWit, and we're really going to be able to do both, right? We want to do everything. We eventually do want to increase the block size. We eventually do want to take ideas from other camps and kind of combine them all at once. But the thing is that because this is a multi-$100 billion network, right? We cannot risk people's funds. We cannot risk people's wealth. We cannot risk the 9 years of hard work that these programmers have done to split the network like that. So, we basically came up with SegWit, and this is what the path is that we're moving forward. And it's really been amazing because the debate was really brutal. It went on for years. It exhausted a lot of people. In fact, a lot of people left Bitcoin because of the whole debate. There was very much a whole lot of uncertainty. And that really got figured out last year, and you can see it in the price. We were pre-SegWit, we were around, 1,000 or something, and then after SegWit, we started the actual climb all the way up to 20,000. So the world recognized that Bitcoin found a solution to scale. And that is just really, really important. That's really going to allow Bitcoin to reach everybody.
All right, Trace, what were your thoughts on the Bitcoin fork? Were you with the big blockers, as they call themselves, or were you with the layer 2 solutions?
I guess I got all of them now, right? When you're dealing with Bitcoin directly, when you claim your monetary sovereignty and you run a full node and you hold your own private keys, what does it mean to run a full node? It means that you're validating the consensus rules of the protocol. That means that you're not trusting anybody. You're proving whether you received a Bitcoin or not, according to the rules of the protocol. And so a hard fork is when you either remove a consensus rule or you you make a consensus rule less restrictive. So you change it from 1 megabyte to 2 megabytes, for example. A soft fork would be where you make a consensus rule more restrictive. You change it from 1 megabyte to 500 kilobytes. Well, when you make a hard fork, especially one that's going to make it less restrictive, like 2 megabyte blocks, that increases the cost for people to run a full node. So you're effectively attacking their monetary sovereignty when you want to run a full node. And when you're dealing with a bunch of people who have FU money and an FU attitude, and then you try to attack their monetary sovereignty, what do you expect? Of course it's going to be very contentious and very brutal. And so that's what we've seen is that effectively, a release valve opened up with Bcash, and some people exited the Bitcoin system who didn't have the same ideology as represented in the code. And both networks have gone on just fine, without a hitch. And so I think it removed a lot of uncertainty, like, oh, are they going to still work? Are they going to still function? And I was right in the middle of all of it. I had several meetings with Jihan and Roger Ver about it, and I guess we just couldn't see eye to eye. So you run the software that you want to run, and you determine what a Bitcoin is to you. And it doesn't really matter what other people call it or anything like that. Your software determines it. And that's a very empowering thing for individuals, because we now have satellites deployed across the globe. You can run a computer that never touches the internet. You can download the blockchain via these satellites. You can verify your Bitcoin transactions. So we have custom hardware that makes it even more censorship resistant than the current internet. I mean, that's a huge tool for individuals to claim control over their money. And when you can claim control over your money, well then you're able to claim control over a lot of other aspects of your life. So if you're going to attack people's ability to do that by raising the cost to $20,000 to run a full node, that's just not what a lot of the early Bitcoiners are about. They're about monetary sovereignty as cheap as possible for everybody in the world. And that's, we should keep that in mind with any of these forks. Anytime somebody tries to attack your monetary sovereignty, don't just roll over and let them take it, claim it. You have to claim it, otherwise it's gonna get taken from you. And it has already with our current monetary system.
Now, Adam, I've heard some people say that Bitcoin Cash is closer to Satoshi's original vision because it functions more like a currency. Whereas with the Lightning Network, you would have Bitcoin kind of as a settlement layer, and you would maybe put $40 in your Lightning account, send around $1 here or there to Starbucks, cash out when you get enough, or just spend them and get some more. Where the Lightning is more like the currency. Do you think that Bitcoin Cash is closer to Satoshi's true vision?
No. And I wanted to say that Bitcoin is the next Bitcoin. Keep that in mind, people. These forks that we've had, it's nothing to fear. We talked about how the Bitcoin is a secession from the traditional financial system. So in the Bitcoin community, we should welcome secessions from the Bitcoin community. If someone wants to go their own way, let them go their own way, and good luck to them because we get their coin for free if you're a Bitcoin holder. That's the thing. You can do all sorts of, if you have a problem with Bitcoin, go your own way, create your own Bitcoin, call it whatever you want to. It's a unique way of distributing your new altcoin by forking off.
Why do they get the coins for free?
That's how, when there's a fork, it's got the history of the old coin in it too. And the people with the original coin I'm not a technical guru here.
If
I just know that who here got their Bcash back in August? Okay, and then who got the B Gold? Who's gotten their B Gold? So that was the first friendly fork. All these questions about Lightning Network, we all know Lightning Network's great and everything. I'm answering my own question here and stuff. I wanted to talk about these crypto dividends, because it's been very interesting. Because at first everyone was so worried, it's the end of the world. And then we saw it wasn't the end of the world. It's just a unique way of forming an altcoin and distributing it to people who hold, rewarding holders. And I'm glad to see a lot of you held and got your Bcash, turned it into Bitcoin, got your B Gold, turned it into Bitcoin. It's good to see, but the whole scaling debate and everything, check out the numbers for yourself. SegWit's bigger than Bcash, and Lightning. Everywhere I go around this world, everyone's asking me about the Lightning Network and stuff. There you go. That's the people have spoken, but still, they can. If you want to secede, go ahead and secede. This is great. This is the awesomeness of cryptocurrency, and good luck to all. Arian.
So, Andy, when I hear the word Bitcoin Cash, I think that it must be related to Bitcoin, like if I had a Starbucks Frappuccino. Why are they allowed to use the name Bitcoin for what is clearly a different product?
Right, well, of course, there's no allowed in cryptocurrency. You do whatever you want. You can inside trade, you can call yourself Bitcoin, you can do whatever you want. But the fact is, the whole thing with the scaling debate, when it first happened last year, of course, even the smartest people in Bitcoin did not know what would happen when eventually there was a fork. We feared the fork because we had not seen one yet. I feared it because I'm just a financial guy. I don't even have a technical background. A lot of the technical guys were scared too. We had to see what happened in real life, and we saw. And what we saw was that, as Trey said, it doesn't matter. It doesn't matter at all. The people decide what they want. People have decided now that Bitcoin is more valuable, that it's faster, that it's better for commerce, and of course, it has the network effects. It's that simple. Now in hindsight, as I learn more and more about the technicals to the level of a layman that I am, I realize big blocks isn't even possible. It's not possible to scale. It was all political in the first place, from a whole ecosystem of people with differing incentives. Some people got very, very rich on the fork of Bcash for very different reasons, and some people actually believed it. But the fact was, in hindsight, we now know big blocks not only are not scalable, but the world doesn't want them. In this case, they didn't want the Bcash fork, and the rest of them are just money grabs from B-Gold on. There's no use case in any of them. So just like Mike is saying, a correction from frothy price movements is a healthy thing. The scaling debate was the absolute best thing possible. It brought out the fact that coin is the king, and it now, by the way, has the technology that enables it to grow with the Lightning Network and all these second layer technologies that will make it just as fast as it is secure and valuable.
So, Michael, not only is Bitcoin Cash using the Bitcoin name, I've actually heard that on Bitcoin.com, they label Bitcoin Cash as Bitcoin. So it's like if I tried to sell you an apple and then I gave you an orange. Would that be a fair deal? Or do you think they're in trouble for some kind of fraud?
Yeah, it's pretty crazy. I mean, I saw this on Twitter on Bitcoin.com. They're talking about, they have BCH, and then next to it they said Bitcoin. Then underneath that said Bitcoin Core, which was Bitcoin. So yeah, I mean, they're really asking for it. But you know what? You gotta, I think it's like Napoleon said, don't interfere with your enemy when he's making mistakes. That's what they're doing. They're just completely clueless, and everybody, with every single day is realizing how crazy they are. But I did want to talk about the scaling, your original question, because, for me, as opposed to the people on this panel, I probably spent 20% of my time last year looking at Bitcoin, maybe even less than that, because I focused on a lot of things. But it was one of the most incredible things I've ever seen in my life, what went down. And we have to see it from the perspective of sort of politics and governance in general, and then sort of apply those lessons to, I think, bigger forms of politics. So for one thing, up until, let's say, it really went to a head last year, the Bitcoin community was sort of like all together, all for one, against the world, and then there was a split. And we have to, acknowledge that within human beings, human nature, you become part of something, a community, and then people are going to have different visions. That's always going to happen. So we have to accept that. That's just human nature. So you had that happen. But what really was fascinating to me was to see how VCs and miners, essentially the big money, the clout, were on one side of this thing with the 2X. And then there were the sort of grassroots rabble-rousers on Twitter, with hats and stuff, who were on the other side. At the end of the day, who won? Who really won this game? I mean, you see the price, you see what happened. Market spoken. It was the rabble-rousers. It was the grassroots. It was this sort of decentralized crypto anarchy. That's what won. And then that's when I really realized that this is going to change the entire world. It's not going to just change money. It's going to change the world. Because if you think about it, a lot of people criticize Bitcoin governance. Well, there's no philosopher king, there's no person we can look to make the big important decisions, but that's the whole point. That's why I'm into it. And we saw that it works, and it can work. And I think now we start to, then this is why I call Bitcoin the biggest red pill in the history of humanity. Because if you think about it, once you see that, and you see the crypto anarchy governance, essentially anarchy is the governance structure of Bitcoin, and it worked. And look where we are today. Then you start asking yourselves other uncomfortable questions, which we should be asking. For example, the US has probably one of the best, structures of government still, even though it's pretty terrible these days, compared to other countries. But if you think about the core of it, representative democracy, it's sort of an obsolete, preposterous notion. I mean, you're essentially creating points of failure, let's say 500 and something of them within the House of Representatives, and then 100 senators that can easily be bribed, right? All someone has to do, they want to take control of the political process, say, okay, well, there's 500 of these guys, they come pretty cheap, I'm just going to pay them off, and I take control of the government. It's easy. So you're essentially voting for someone to vote for you, and that person you're voting for to vote for you is easily compromised. It's absurd. So, once we start thinking about that, then we start thinking about, well, what comes next? How can we sort of have structures where governance is more sort of like how Bitcoin works? And I like to say this thing where the future world that I like to see is one where we essentially have rules without rulers. And that's how I see Bitcoin. There are defined rules, it's very clear, it doesn't change much, which is what people like, but there's nobody in charge. There's no central point of failure, there's nobody making the hard decisions. And I think that's the sort of paradigm, and believe me, I understand, because I think about this pretty much 24/7 these days, it's not going to be simple to apply those principles to the ground, the local level, right? Like here we are in Denver, there's certain issues that have to do with geography and the ground that we have to deal with on a local level. But overall, I think that we can get to a point where we are more empowered, where we're making decisions for ourselves. And I think that two things that I wrote in a post yesterday: governance needs to be more decentralized, and political relationships should be voluntary. And I think both of those things, essentially, in the modern world, don't exist for anybody. And I think it's highly unethical. And again, I think this is what Bitcoin can teach us, that a better world is possible. And we essentially saw the governance structure of Bitcoin work perfectly last year. And as some of the other panelists said, which I completely agree with, we got the best of both worlds. The Bcash guys are doing the Bcash thing, and we're still doing our thing. And that's great, because people should have the opportunity to be part of communities or money or whatever they want to be part of, that they want to be part of and that they believe in. And you can leave me alone with what I want to be part of. So that's my view.
All right, so we talked a little about forks and about the way software works. So Bitcoin is open source software, so the code's just out there. So if you make a copy of Bitcoin, it's a fork. And if you make a hard fork, if we imagine the blockchain like an actual chain, and you come along, you put a padlock on, and that represents your Bitcoin. It has a private key. That's your secret code that allows you to spend your Bitcoin. When they hard forked Bitcoin, what they did is they copied all of the transaction history of Bitcoin so that your key works on the Bitcoin network. Now it works on the Bitcoin Cash network as well. So instead of having just one Bitcoin, you'd have one Bitcoin and one Bitcoin Cash. But like we know, it didn't stop there. There were many more forks of Bitcoin. Let's pass it all the way down to the end, and let's go back to Vortex, and maybe just pick one of the forks like Bitcoin Gold or Bitcoin Diamond, and just tell us about what they were trying to do, what they proposed to do, and how they were able to kind of jumpstart their alternative coin by using this copy of the blockchain, which then gave their free money to everyone.
Yeah, I think Adam and Andy are really the the experts on these forks these days, the Bitcoin forks. Adam and Andy have been covering them for a while. I believe that Adam coined the phrase crypto dividend. Is that right, Adam? So that's what we call these forks these days, because it's like a bit of a dividend where you do get this supposedly free money. But it's really not free, because what we're kind of paying for with it is this confusion in the market. And now if you look at Bitcoin Cash, and you can say, well, look at that market cap. That market cap should be within Bitcoin. So you can say that, yeah, it's free, right? But like we're losing a little bit of market share there. And so, but in the long run, as most panelists said here, it doesn't really matter, because it's a long-term game. We're going to play this out over decades, and we're going to see which succeeds and which doesn't. But some of the crazier forks out there, man, there's so many now. Actually, Trace knows a bunch about it too. There's really so many of them out there. You can go on sites like CoinMarketCap and check these all out. But some of them are interesting and some of them are not. Most of them, unfortunately, are going to be just cash grabs and scams. So you got to be pretty careful. But I guess Bitcoin Gold was interesting because they thought that the ASIC mining was a bad thing. That how we currently are securing the network through these ASIC processors, where it was a bad thing. And so they wanted to take it back to Satoshi's vision a little bit, again, kind of playing on the Bitcoin Cash fork, where they wanted to have everybody be able to mine and secure this network with just regular graphic accelerators. So anybody can go and pick up one off the street. So they're relatively cheap, a couple $100s. But ASICs now are more expensive, in the thousands of dollars. And so the idea was, maybe the average person can't afford an ASIC, but they can afford a graphic accelerator, right? But that ended up, we thought about it a little bit, that ended up actually not being the smart idea, because what we realized here is that the actual ASIC processors are far more simple to produce for manufacturers. So what you end up with in the graphic accelerator pace is just this kind of ATI versus NVIDIA, and that's going to be with us for years and years to come. I don't see that changing anytime soon. But with ASICs, there can be a number of manufacturers, because there's no particular patent on an ASIC. All an ASIC chip or processor actually is a very defined process, just doing one single process over and over again, one single simple process. So because of this, the openness of this, we found that securing the Bitcoin network is actually much more efficient from these ASIC miners. So it was a good lesson for people to understand and a good thought experiment to go through to figure out what is the best way to secure, the Bitcoin network. And as it stands right now, it really is, in my opinion, the ASIC processors, because we're now seeing much more competition coming in. And in a few years' time, you're going to see a lot more competition than just ATI, versus NVIDIA. So Bitcoin Gold is one of the interesting ones, taught us a couple lessons, and there's going to be a lot more of these forks. But You got to really be careful because a lot of these forks, again, are kind of money grabs, and then they're even more insidious than that. Some of them have actually been stealing people's private keys and stealing people's Bitcoin. So you just really got to be careful with it and do your research. But it's fun stuff, and it's just another amazing thing that we really couldn't really predict. If you try to talk about Bitcoin back in 2013, nobody was talking about forks and these other things. It was really only altcoins. But now a fork is just the repeat of the altcoin process. And then we had, before the forks, we had an ICO craze, which was just a recreation of all these altcoins that came out in the early days. And then so we had the altcoins, then the ICOs, and now the forks. And what will happen next? Nobody knows. But this space really continues to just throw everybody for a loop, because there's no way you can predict what's going to happen in Bitcoin in the next 90 days. It really is always new and exciting.
Now, Trace, Jeff mentioned that there were unknown costs that had to do with the Bitcoin fork. I was wondering if you could give us kind of an exchange perspective. Do you think that the exchanges will keep adding these forks? Do you think it was a good idea when the exchanges added the forks? I know Coinbase said that they were going to allow you to withdraw your Bcash, because if they were holding your Bitcoins, they're kind of the ones holding your private keys. They're the ones that could give you access to all these forks, but they had to write code to do that. Do you think it was a good idea what Coinbase did, adding the full buy and sell for these things? And then do you think everyone's going to add them in the future? Will we see Bitcoin private or Bitcoin watermelon on the next Coinbase update soon?
I don't know.
Yeah, so the question was, any good ideas come out of Coinbase? I'm not sure. I think it was a very good learning experience for people, because if you didn't hold your private keys, you didn't have control over your fork proceeds. And, we still don't have Bitcoin Gold supported by Coinbase. We don't have Super Bitcoin. We don't have Bitcoin Diamond. We don't have Bitcore. We don't have a whole litany of them. And a good example is with GBTC, the Bitcoin Investment Trust. They paid out about a 5.6 cent dividend for Bitcoin Gold, which translated to about $60. If you had control of your Bitcoin Gold and were able to sell it relatively early, you would get about $360. So you get 1/6 of it. and so, but there are risks. If you're holding your own private keys, there are some risks that can be built into these things. For example, the client you download for Bitcoin Gold might actually be malicious, and so it might compromise your private keys. Or, and even if you've sent your Bitcoins to new addresses, make sure it's in a new whole wallet, because the derivation chain on some of these, you might have your additional private keys compromised if you get an earlier private key. Another problem is, like, in the signing of some of these forks. When you actually sign a transaction, you could compromise your private key that way. And so I haven't necessarily researched or seen if any forks have done this, but I think that would be a great way to compromise people's private keys and potentially steal their Bitcoins. And if you don't get their Bitcoins, you still compromise the private key, so that means that you could get any of the other forks that they might not have claimed. So that's something to keep in mind too. All of this, comes down to individual and personal responsibility. If you're running your own full node and you've got your own private keys, then you're pretty much not affected by any of this. And if you are savvy enough, then you can collect those forks and turn them into more Bitcoin or turn them into something else. So I think that's all very, very positive. Your other question about the exchanges, and as a large investor in Kraken, we saw this a lot. These forks are basically DDoS attacks on developer resources because the people who are forking the coins are able to externalize the costs onto the exchanges. And this is potentially a legal cost because you have an unjust enrichment if you don't claim the coins for the people. But when you're managing private keys, like at Kraken, we write all of our own wallet software, you know, so that it's not just floating out there for anybody to hack our system. And that's very expensive and takes a lot of resources. So, but the people who fork the coins, they can now fork the coins with basically no costs. I got one of my friends, he's a Bitcoin core developer, got him to build this website, forkgen.tech. And so you can go in and you can change the name and the variables and all this stuff and hit generate, and you've now forked Bitcoin. And so the barrier to entry to fork, we've basically just dropped it to 0, which means that everybody and their dog can fork a coin now. And so I think that's actually a good thing, because the more forks we have out there, the harder it is to actually gain the network effects. And the whole reason people try to do these forks is to get network effects. You know, if you give people a bunch of these free tokens, then you automatically have a bunch of the users. And so you're able to leech some of the network effects. The other costs that are borne by these forks, I think comes in the form of brand confusion. But as we're seeing with Bitcoin Cash, think about it. If your coin is so strong, and if your developers are so good, why would you want to confuse people to think that it's Bitcoin? I mean, why would you even want to use the same name? I mean, that just reeks of absolute weakness. And I mean, you don't have any faith in your own coin or your own developers. I mean, it's actually really sad and pitiful. And so, yeah, I kind of take the stance, I don't really care what people buy. You know, like asymmetric knowledge, you might know something I don't, like all the power to you. The market is going to reward with profits and losses. But where I do kind of take a stance is I want people to know exactly what they're buying. I don't want there to be any confusion whatsoever, because that in effect is a way that you infringe on people's ability to choose. And I think people should be free to choose what they want to do, but you shouldn't infringe on that ability to choose. And so when we have these confusingly similar names, or even worse, when you build into the network, you lack replay protection or some of these things, then you can get some of the newer, less savvy users to make mistakes. And that's an unfortunate thing that happens, but it comes down to personal responsibility, and it's a good way to incentivize people to learn what they're doing and why they're doing it and how they're doing it.
All right, Adam, as Vortex mentioned, you and Andy are both into calling these crypto dividends. What do you suggest people do with their crypto dividends? Should they hold both sides of the fork, so no matter who wins, you'll be fine? Or do you think they should sell them into Bitcoin or maybe even to fiat?
Well, can you hear me?
We talk right into the top. I don't know.
I got a big loud voice, but all right, let's take it a step back also. Never, in terms of cryptocurrency, why would you buy something that you can get for free? But the amazing thing about the times we live in, so many people, when these things come on exchanges, they start buying them. They should have gotten them for free, because they should have been holding their Bitcoin and controlling their private key and getting them for free. And then I recommend to people, if you somehow are able to, first of all, let's take another step back. I only mess with my crypto dividends when my Trezor splits them for me, okay? And so far, it's only been B Cash and B Gold, and then you decide on your own, how am I gonna make the most Bitcoin off of these things, okay? That's my thing. I don't believe in their long-term futures. The only thing I care about long-term is Bitcoin. So of course, I'm trying to maximize my Bitcoin in every way I can every single day of the year. So if these free tokens, coins, whatever you want to call them, crypto dividends are coming to me, I'm trying to turn them into more Bitcoin. Now, the Bcash thing, they have their pumps and dumps. It's been cyclical, so there have been times you've been able to get, it's been worth 0.3. Again, you got to value. Don't care how much your Bcash is worth in terms of dollars. Think about how much it's worth in terms of Bitcoin, and it's been worth like 0.3 Bitcoin. It got even higher than that once. I mentioned, and the question about the exchanges, it is truly a pain in the butt for them to deal with these. That's what I've seen. They're the kingmakers. If they do choose one of these guys to list, it makes a tremendous difference. So as Andy mentioned before, there are really no rules in this space, and I get, God bless cryptocurrency, no rules. So if if you're a guy behind one of the, and again, all of these are centralized currencies also, so if you're the team behind one of these crypto dividends, you can just bribe some exchange. I mean, it's going to happen, and maybe it has happened before, and perhaps some of them haven't done a good job of bribing. There's been a lot of questions about, well, why hasn't Be Private been listed on some of these? And people come up with these conspiracies. Be Private, I guess, originally there was a question like which ones are interesting now. That one, it's a privacy version of Bitcoin. It's basically everybody that held Bitcoin gets a Zcash version of Bitcoin. That's the basic way I can explain it. That seems cool. If I get it for free, whatever. I'll try to get some Bitcoin off of it. So, I mean, again, most of them aren't very unique nowadays. So, they're called like super. That makes it super, I guess. Or you get 10 for 1. I mean, there's all sorts of different gimmicks. But again, there are people out there that buy this stuff. So there are people giving value to this stuff. I don't know why, but if people are going to do that, then I guess let them go their way, and you take advantage of that situation. Don't buy it. Get rid of your crypto dividends, and benefit from other people's stupidity, I guess.
Like Trace mentioned, it does cost a lot of developer resources for the exchanges to add these new coins. Additionally, there is some risk. It was a long time ago, and no one remembers, but there was this exchange called Cryptsy, and they would add every altcoin under the sun. They had 100 of them. You just scroll through these markets endlessly. And at least according to what their founder said, there was one called Lucky 7 coin that wasn't really a coin but was a Trojan. And allegedly this Trojan got inside of Cryptsy's system and stole their money. Now we don't know if it was the Trojan or an inside job, or for all we know they wrote the Trojan themselves. But adding these new coins is a risk, does take resources, but we have to see how it turns out. Now, Andy, I know you have a favorite one of these coins, Bitcoin Rhodium. So why don't you tell me what Rhodium is about and why it's better than the other coins, and it better not just be that it's bro and it's used by a lot of bros.
Okay. Now I'm not going to, I can talk about that one specifically, but the bigger issue is crypto dividends in general show you exactly why being a Bitcoin holder is so valuable. Because if you own Bitcoin, you don't have to, you're going to get so much stuff for free. Most of it you're never going to claim, most of it is going to be worthless. There was a time right in the beginning when these things were all worth a lot. Actually recently, in the last few weeks, they've shown some signs of life, but the fact is, most of it you're never going to be able to claim because as Trace will tell you as an investor at Kraken, and saying before, it's just not worth the resources. And in a lot of cases, the developers don't even give the code to the exchanges that would make it safe to do. And in the case of something like Trezor, once they realize after Bcash and Bgold that they are not going to be sued if they don't give you all these 10,000 forks, they're just going to have nothing to do with it. So you can do extremely risky things to get a hold of these things, like people see on my Twitter on the top. I work with Rocky Palumbo. He actually can do these things for you safely, but it takes a lot of effort to do, and they're not worth a lot. And frankly, my advice to everyone is just don't touch it. If the Trezor wants to split it for you, that's great. They've split 2 so far, but a lot of these other things are Trojan horses, and unless you are brilliant, like I'm sure Trace or Vortex could actually get all these things at home by themselves because they actually are like cryptocurrency experts. But the average person like me, I don't have a clue what's going on unless the Trezor says they're doing it. I think that in the beginning, it was that the first crypto dividend had nothing to do with being a dividend. It was a attack on Bitcoin, but it turned out well, as Trace was talking about. And hey, we got some free Bcash. Maybe Vortex is right. Maybe it took away from Bitcoin, but maybe Bitcoin got stronger because Bcash came around and didn't destroy Bitcoin. So it's debatable. I would say net, it's a real good thing that I had Bitcoin and got Bcash. After that, the next one was Bgold, which really, I guess they were a bit idealistic, as Vortex was talking about. They actually thought that they had something different. But again, as soon as it comes around, you realize, well, what's the point of this? Everyone else can do the equihash or all other kinds of things. It doesn't practically work. Bgold and all these other things are super slow. And then the rest of them that all came out pretty much in November, December were all pure money grabs. There were actually people buying this junk on the exchanges. And right now they're, even if they have prices out there, they're extremely liquid and you're not going to be able to split them. But that said, crypto dividends in general, as Adam was talking about, is now, it's becoming a new way to create coins. Forks was fashionable recently because it was easy to do, but I think we're starting to realize that people think of them as Bitcoin clones, which is what they are in most cases. They don't have use cases. B Gold, perfect example. B Diamond, it literally does nothing. And so that's why they're gonna die off. Maybe they'll pump up in like right now. They pumped up for a few weeks, but they don't do anything. But there are other coins that are going to be created through Bitcoin or through Ethereum or through other things, mostly Bitcoin, that are going to give you coins that will be worth something someday. And the thing I need to emphasize, like we'll talk about B-Rhodium, is, you know, I wrote this article a few weeks ago called Cryptocurrencies versus Securities. And this is from my Wall Street background. I'm saying, every cryptocurrency is not aiming to be Bitcoin. Everyone is not aiming to be digital gold. It's not aiming to be the next transaction currency of the world. The ones that are going to lose to Bitcoin. But there's going to be an enormous ecosystem of service companies and altcoins that have some kind of function that will be perceived as valuable by somebody. We don't know which ones they are yet, and if you just hold Bitcoin, your risk-reward profile for making these investments is vastly better. But there will be things that are worth something, and maybe, you know what, maybe B Diamond does something one day that makes it valuable, and guess what? I'll always have it, because as soon as it becomes valuable and splittable safely, I will do something with it. Now, as for B-Rhodium, the reason I like it, and it hasn't started trading yet, is because it is an airdrop, and for all the reasons that we're talking about here with how risky it is. I mean, if you want to get B private right now, you'd have to go to someone like Rocky and say, okay, I'm moving all my Bitcoin to another Trezor, and I'm going to give you my private keys, and then you're going to split it off, and then you're going to sell it at the exchange and take a piece of it and give it back to me. I mean, that is complex and it's dangerous. Not on his part, but on your part, because you could do something wrong. And it's not worth much, and it's pretty illiquid. And there's tax ramifications involved. There's so many reasons why that doesn't work. With the airdrop, which I think is going to be not only a crypto dividend type, but just a creation of altcoins, you are given it. All you have to do is sign your public keys, not your private keys, and it's given to you. So you don't have to wait for Trezor or Kraken to split it. You have it. It may not be worth anything. Maybe an exchange doesn't support it, but the fact is you take less risk. So I think that if you have something that has a use case, I believe B-Rhodium has a use case, but we'll see if the market determines that. If you have something that's a use case and you can create it through an airdrop, I think it's going to be a lot easier for the community to accept. But time will tell, as Vortex says. Who knows what will happen in the next 90 days of Bitcoin.
Yeah, I completely agree with Andy that when you're claiming these forks, you're using your private key. So there is a certain amount of risk. And I know when I claimed the Bitcoin Cash fork, which I did on Trezor like everyone's talking about, I have that thing from installing too many programs on Windows. I just pushed next. And I got to the end of it and I was like, uh-oh, where'd my Bitcoin Cash go? And I had no idea. And I had to go to the web and read, and you go to this beta version of the Trezor website, you get to see your Bitcoin Cash, and then I was able to split them off and sell. But that's just with one of the forks, let alone all of the forks. But Michael, do you agree with Andy? Do you think that we're going to see more hard forks like this in the future? Is this all the ICOs, the altcoins, is it easier just to give it to the Bitcoin people and then hope that things go well?
I don't know. I mean, I sort of feel like we're getting to the point where it's getting a little played out as far as all these things. I mean, as everyone else mentioned, in a lot of cases it's the reward to trying to split and get the fork is not worth the risk. So, I mean, I did Bcash, as everyone else here did, and I just looked, but the reason I was really into doing that is because it was just free money, essentially. I mean, I wrote a post as soon as I knew it was gonna happen. I said, don't sell your Bcash right away. And the reason is, look, you don't need to be a psychologist to know what Vera's gonna do. You know, they're gonna pump the thing, and they're gonna do everything they can to get the price up. And so for me, it was just a way to get some money and not have to sell any Bitcoin. So I mean, that's how I viewed that one. I doubt, personally, I doubt that, you know, anytime soon we're gonna see another fork like that will reward you with significant sums of money in the way that Bcash has. I mean, there was just such a, you know, affluent, powerful force behind Bcash that was very motivated to get the price up and continues to be, and I just don't see that dynamic playing out again anytime soon. So that's sort of my view on that. One thing I did want to mention, however, which I think is important, is that, you know, a lot of, particularly like gold bugs and stuff, you know, they're obsessed with the COMEX and you know, I don't know how many of you are familiar with that sort of narrative, but in any event, you know, they're convinced that the COMEX exchange is manipulating the gold price, but you know, probably is. Either way, the concern though, is that with Bitcoin is that, okay, now, you know, the COMEX is going to take a big percentage of Bitcoin, everyone's going to trade on the COMEX, and it's going to be manipulable, but forks actually were interesting because even if you're a hedge fund and you're saying, okay, well, I don't need to own the actual Bitcoin, I'm just going to trade it on the COMEX to just get the exposure, right? Because all they're going for is fiat anyway. They're just trying to make returns. So they say, okay, so who cares? I don't need to own the actual Bitcoin. I'll buy it on the COMEX, and I'll make my 50%, I'll cash out. But here's the thing. When you saw the Bcash happen, that was a huge opportunity cost. If you're long on the COMEX, Bitcoin, you're a hedge fund, while that fork happened, you're not getting the Bcash. That was a huge dividend. It's a huge yield that you just missed out on. So it actually is a really powerful, positive thing for Bitcoin because it once again exposed the difference between Bitcoin, your private keys, and this sort of paper Ponzi scheme derivative mess that is the global financial system. And it just made the case stronger for actually owning Bitcoin and what Bitcoin is. And you know, this was one of the things that first got me really excited about Bitcoin because of course gold is manipulated. Yes, of course, everything's manipulated. I mean, look at like negative yielding bonds. I mean, of course, if you don't think that the entire financial system is completely manipulated every single day, then you're just not paying attention. And when you think about Bitcoin and the way it's structured, you realize that even if you wanted to manipulate it on any sort of extended period of time, it's virtually impossible. Sure, you can buy up a lot of it, dump it at specific times, and you know, do that. And maybe that's what just happened. You know, who knows? But in the long run, it's impossible. And the other thing that I think is really important to mention, which again I was impressed with during the whole scaling thing last year, is that the Bitcoin, because you know the Bitcoin community tends to be really smart and very passionate, they're really good at sniffing out BS, and it was sniffed out with these with the VCs and the miners. But trust me, if something funky is going on, one of the exchanges like really funky, and there is manipulation going on, I believe the Bitcoin community would sniff it out. And all you have to do at that point is raise that flag and say, pull your coins from that exchange, and the whole thing can collapse. So anyway, that's my kind of view on that.
All right, Trace, did you have more on this topic?
Yeah, Mike hit on an extremely important point there. So if you followed Gada's work, you see that central banks, they hold gold in the vault and gold out on loan as the same line item. In effect, they're reporting cash and accounts receivable as the same thing. And we don't have a blockchain for gold. We don't know exactly how many ounces are there. And the COMEX markets have something like over 100 paper ounces for every physical ounce. And Kyle Bass is like, he was up there and like, well, what if everybody asked for delivery? And he was like, well, we wouldn't have it. And Kyle Bass was like, well, I guess it's just a function of price then, isn't it? and so if they tried to, and this was fascinating because, you know, we don't know whether the Chinese government is involved with Bitmain or not, but you know, we saw the fork happen, and then what happened almost immediately next? The CME futures got approved. You know, these regulators have been sitting on their hands for over 5 years. And then, like, after this happened, they approved that. And then, well, first we have the fork, then we have China and Iran and Russia issue their new gold trading platform. And then we have the CME futures get approved. Like, it's just like the chessboard just moved, like, super fast. And about a month before the CME futures went live with trading, I went down to one of the major bullion banks in New York City and met with about, I think it's like 5 or 6 of their managing directors from the trading floor. And I was like, look, you guys aren't gonna be able to naked short Bitcoin like you've done with gold. They're kind of like, why not? And I'm like, because if you do, we're gonna fork it. And you're not gonna be able to cover the fork. And so, you know, this is very interesting dynamics, because if you don't actually hold the underlying, then when the forks happen, you don't get the underlying or the derivatives from that underlying. And this can pose significant threats to, anybody who's trying to, these paper mandarins. And additionally, this gets even larger in scope because, think about it. If you hold a lot of something, why run a cartel to keep the price down? Because that's effectively what the central banks have done by leasing gold into the market. Well, part of it is to suppress interest rates. But really, the larger part of it is because their power to issue what we use as currency is infinitely more valuable than the price of a portfolio asset, than the gold. And so when you're holding gold, you're effectively fighting every central bank in the world, but they can just create as much paper gold as they want. But they can't create Bitcoin. Well, they can't create paper Bitcoin, and they can't create Bitcoin either, through something like nuclear transmogrification. So you've got this major problem where they're suppressing the interest rates, which go into half of all the transactions in the world through the various fiat currencies. So they've distorted the pricing mechanism because the interest rates regulate production over time. So they've distorted that, and now price and value are effectively bifurcated from each other. And we have to, and this is a form of censorship at the end of the day. This is a form of economic censorship. And so if Bitcoin really is censorship resistant and really is fit for purpose, then its ability to liberate humanity from this form of economic censorship holds tremendous promise. And in that comes massive wealth transfer from holders and beneficiaries of a current fiat currency, fractional reserve banking, derivative-based and propped up system to commodity currency that's 100% held, no fractional reserves. I mean, this is like an iceberg just flipping over if this economic censorship of the pricing mechanism, if this price control fails to market forces. And so, thanks, Mike, for bringing this up because it's such an extremely important point. And if that happens, then, we're talking about, this isn't just a garden variety exchange rate adjustment. We're talking about the repricing of every single asset worldwide, probably and extremely fast. Like the CEO of Interactive Brokers was like, we can't trade Bitcoin futures because it could pose systemic risk to the world financial system. Like, really? My little magic internet money can pose a risk? You can't be serious, And then the central banker from Canada is like, Bitcoin keeps us up at night. Well, obviously we're doing something good. Because I sleep very soundly because I have a full node and hold my own private keys. And that's part of the threat to our current system. Additionally, and not just talking about the currencies themselves, like the dollar and the yuan and the yen, but let's talk about the other assets. Let's talk about the Dole Foods case that happened in Delaware. There was a tender offer made on Dole Foods, and they tendered 48 million facially valid shares. Now the problem is that only 36 million shares had been authorized. So the broker-dealers had effectively sold 33% more shares than were authorized. And so everybody who had a facially valid claim, they thought they owned Dole Food shares, even though they hadn't been authorized. And so this $295 million case, eventually the broker-dealers had to take the hit. But in the case, they said, well, that's just how everything's done. And so that's a valid defense for selling the same thing twice, right? And just to drive the point home, Peltz wanted to get on the board of Procter & Gamble, and Procter & Gamble didn't want him on the board because he's an activist investor. So they go out, and they do the voting, and Procter & Gamble didn't like the results of the vote, so what did they do? They challenged it in court. They spent $40 million trying to keep Peltz off the board, counting and recounting the votes. You should be able to count the votes just like that, right? Well, they finally dropped the lawsuit and let Peltz on the board because they couldn't accurately count the votes and thought it would cost too much. That means they have no idea who actually owns the Procter & Gamble shares that you think are in your retirement account, but they're not there. Not really, because they're held by Seed & Company, and the records might have been destroyed in Hurricane Sandy. And so we don't really appreciate the value of holding the private keys to our own asset and being able to validate that we actually own that asset without going through a third party. And so, like, you think you have Dole Food shares? You think you have Procter & Gamble shares? You think you have Ford shares? Prove it. Because I can prove that I have Bitcoins. That's what my software does. It validates and mathematically proves cryptographically that I have that asset. It's tied to that private key. And so, you know, this is for our current system that is really just a bunch of compounded illusions. People don't fully appreciate the risk that they're taking with other assets. And that's really what we're talking about. What is the new risk-free asset? What is the new asset that has the lowest risk profile? Is it 10-year treasuries? Which they don't even know how many of those are out there either. Is it gold? Or is it Bitcoin? Well, with gold, I mean, think about this. Billions and billions of dollars of gold traded every year. And I was a big investor in gold money. And gold money had a very simple business model. You would wire money into gold money, you would buy the gold, we would go out, we would buy the gold from the bullion bank, they would give us a bar, we would go put it in our own cage in the vault down in London, like gold money, you know, put it in our cage. Very simple. And then we had a whole method with like trusts and everything so that 1 ounce in the database equaled 1 ounce of gold in the vault. Well, when James Turk started gold money and went to the bullion banks in London to get a source for the gold bars, they were like, oh yeah, we'll sell you gold. And he's like, yeah, but like I want to put it in our own vault, in our own cage, in the same vault. They're like, well, we don't really do that. Nobody does that in the gold market. You know what we had to do? We had to leverage relationships with some of the other shareholders. One of them was Adam Fleming, the brother of Ian Fleming and Goldfinger. Leverage the relationship through that with a gold company in South Africa to buy the supply that came out of a refinery. So we had to, like, in order to buy a gold bar, you gotta be kidding me, like, to put in our own cage, right? Like we had to do this convoluted thing where we actually bought the gold out of the refinery, and that's how we were able to buy the physical gold bars. I mean, this is really crazy. So nobody knows who owns what down in the vault in Zurich or in London, and then you have to actually melt down gold and recast it. You know, that's how you are able to prove that you actually have the physical gold. Because gold has a certain number of atoms on the periodic table. And if it's one more atom, kind of like a hard fork, then it's not gold anymore. And so, but think about it with Bitcoin. Every day, $20 billion, more or less, of Bitcoin is sent back and forth in transactions. And every single transaction, you melt down the Bitcoin and you recast it into new UTXOs. And that's a service that's provided pretty much free of charge. It costs you a transaction fee, which currently is very low. But that's a service that the Bitcoin network provides that even the gold market doesn't do. And you have any idea what would happen if people wanted to withdraw Bitcoins from Kraken and we didn't process the transactions on the blockchain? Like, all pandemonium would break loose. Like, we saw it with Mt. Gox, we saw it with everything. So the crypto investors who are holding their own private keys, running their own full nodes, they are bringing a level of transparency to the current financial and monetary system that I just don't think that system is going to be able to withstand. We're bringing a mathematical precision down to the last Satoshi. You know, no more of this trusting that we have Procter & Gamble shares in a mutual fund, in a whatever, like, prove it, you know, and that really should be our mantra. If you think you own something, prove it, prove that you own that thing. And with Bitcoin, we can prove it. You know, Warren Buffett, 10 years ago, in 2005, he encouraged in his letter of shareholders, he encouraged everybody to write to the transfer agent and take possession of the Berkshire Hathaway shares. Why? Because nobody knows who owns what in the current system. I mean, it is absolutely mind-boggling and insane. But, you know, what's the first rule of panic? You do it first. At the end of the day, we have a massive liquidity pyramid that's been fractional reserved out to infinity with derivatives, $2 quadrillion worth, and there is maybe $100 trillion of assets really in the world economy, maybe a little bit more, because we're talking about bad debt's going to fail, so all those bonds are going to evaporate. If you're on the other side of that transaction, and that crunches your cash flow, like what happened with Toys R Us, poof, there goes that business. What's that business worth anymore? And so when we're talking about this great credit contraction that we're in the middle of right now, that is just grinding on relentlessly, people seek safety and liquidity. And, Bitcoin is right there. It's in the blockchain. There's none of this check in the mail thing. Like, it's either in the blockchain or it's not. And you can prove it. And so, that's a huge point that Mike hit on that I think is extremely important for people to understand just how revolutionary Bitcoin is to the way that humans operate and establish trust. Because why should you trust anybody if you don't have to? Minimize the amount of trust you extend to the lowest extent possible. It's not that we won't trust anybody, it's just don't extend any trust if you don't have to extend the trust.
All right, well, we do have one more topic before we open it up to question and answers, but first we have a little housekeeping. There are restrooms to the left and to the right at the rear of the stage, and if you're parked in front of the...
Yeah, sounds good. Really quickly, if the person that owns the Honda out front 028 WMP, is that someone in here? It's a little Honda SUV. Just wondering if you could slide it back one parking space. Does that belong to anyone in here? Out at the meter there? Is that you?
No.
Oh, okay. Maybe not. Okay, we're trying to get the pizza truck in out front there, and we're ready to move a bunch of cars, and that would help a lot. Honda CRV 028 WMP? Okay, if not, we'll make it work. Thank you very much.
All right, so we've talked about Bitcoin hard forks, where they make a full copy of the ledger and everyone gets the same coins. And we've talked about soft forks, but I think what we haven't talked about are altcoins. Bitcoin is open source. You can just take the code and make a copy of it, change it to John coin, and all of a sudden, you're the John coin. You made it. It takes a lot more to get people interested in that, but we've had an explosion of smart contract coins, privacy coins, exact copies of Bitcoin, like Litecoin, where they have more units. They have 4 times the units. Many people call Litecoin the quarter to Bitcoin, or the silver to Bitcoin's gold. I'd just like to ask everyone on the panel, we'll go start with Andy because he's got the microphone. Are there any altcoin projects that you personally find interesting, or that you might think maybe even could surpass Bitcoin?
Well, the latter is ridiculous. But again, we're talking about digital gold, which is the reason that I'm in Bitcoin in the first place. It may well be the future of money. I think it will be, but the reason I'm in it is the same reason that I was in gold in the first place. For sound money reasons, I believe that fiat currency, like all past fiat regimes, will die out, and that gold was the best alternative until Bitcoin came along. So as for me, and as I also learned in the precious metals sector and other sectors in my various lifetimes, the safest, riskiest, least risky way, the best risk-adjusted return is always in the core. So if you're in gold, your risk-adjusted return is going to be a lot better than silver or precious metal miners. And in Bitcoin, which is vastly more complex than gold or any other sector of the stock market, Bitcoin is vastly safer, and it's also vastly better than anything out there. The network effects that Trace talks about, but Bitcoin has got all of them. Pretty much, there's very few altcoins that have any of them. I guess Litecoin would be the example of something that it's been around long enough that it has some type of network effect, but there's nothing Litecoin can do that Bitcoin can't, and Bitcoin is a lot bigger and faster, and is a quarter of the coins, and central banks look at it and more valuable. So as far as I'm concerned, I really don't care about altcoins. I have not the slightest interest other than learning what they are doing. And as I said, there will be winners. There's going to be a periphery, just like in the dot-coms. There were lots of losers and a handful of monster winners. And we were talking about before the price of the internet. Well, there are probably a couple of quote .coms that actually performed better than the price of the internet over time. Maybe eBay was one for a time, or maybe Amazon if you went all the way back to the beginning to where they are now. But most of them fail. Most of them go nowhere, and they're very risky. So I am still holding. I am a quote Bitcoin maximalist because I am in it for sound money. And as I have learned in being in Bitcoin for several years now, it is by far the best cryptocurrency by many multiples. I don't see any reason to even look at the altcoins from an investment perspective, especially because I'm going to get these crypto dividends, some of which will be valuable, some of which will not. So, and again, I'm not a tech person, I'm a finance person, so I don't know, I couldn't tell you, and Adam will talk to you about, he'll say, the buzzwords. When you see more buzzwords, avoid them. A perfect example is this EOS. If you listen to the new hot one, if you listen to, or read their white paper, it's got every buzzword imaginable, but it doesn't really do or say anything other than suck people into investing in it. So to me, I have no interest in altcoins at all. I will hold Bitcoin for the long term, period.
All right, so Adam, the same question. Are there any smart contracts or utility tokens that you find interesting?
Oh, the flavor of the month coin. I mean, every month, every week, you hear about a new one that's going to be the next Bitcoin. And of course, they all want to be the next Bitcoin, but Bitcoin is the next Bitcoin. Most of them are just, they're all centralized. They all have marketing teams, so they all have outreach, and Bitcoin doesn't have that. Bitcoin isn't centralized. Bitcoin doesn't have a marketing team. So in that sense, they have an advantage in terms of spreading the word and in terms of hype. But it is mostly hype. Now, some of the ones that are serious can be considered test nets for Bitcoin. Bitcoin isn't as private as it could be, and there are some privacy altcoins that are interesting, like Monero and Zcash and whatever else is out there. And let them experiment with whatever they're doing in terms of privacy. Let Bitcoin learn from that, and let Bitcoin eventually incorporate what they're doing. So I think, again, the best ones are test nets. Some are going to be hyped to all sorts of levels, and when you've been in this space long enough, you just get used to, the buzzwords just become very boring. Do not get tempted by the buzzwords, and realize that if you've just heard about the next big thing, that, a year ago there was another next big thing. And, if you've heard about the flippening, that one of them is going to become worth more than Bitcoin, well, there was another one that was supposed to be that. It's all very cyclical. Be very patient, and you will see it all play out over and over again. And the one constant is Bitcoin is still number one. Bitcoin is the one that's going to last the longest. So I tell people, if you've got fiat, only spend your fiat on Bitcoin. It's not worth it to mess around with these altcoins. And over the long term, I think there's going to be a top tier of them, and Andy referred to that. But again, Bitcoin will be high and mighty above even the top tier of the altcoins. So that's my opinion on it.
Now, Trace, you were early into Bitcoin, and a lot of it was for philosophical reasons. Are there any of the altcoins that excite you in the same way that you were excited by Bitcoin?
Well, I'm waiting on my CME Dogecoin futures contracts. No, we've got set of network effects, and you can use them to analyze any of the altcoins. You got speculation, merchants, consumers, miners, developers, financialization, and world reserve currency status. And so, a lot of them are trying to increase the block size to go after that second, third network effect. Or they're trying to implement some type of privacy feature or whatever. But as we just saw with Monero, Bitmain decided to make like 5 forks of Monero. Why? Because they're going to start trading it, and then that's going to de-anonymize the way that the ring signatures worked. So it's a direct attack on the Monero network, and I think a lot of people may have overestimated just how private Monero was. And they might get a couple people in SWAT uniforms that show up or pick them up or something. But no, there are very few of any of these altcoins that over a long period of time have actually outperformed Bitcoin in any meaningful way. One of them, I interviewed Evan Duffield from Dash when it was $3 on my podcast. It hit like 1,300, it's around 500 today. and it's outperformed Bitcoin over a couple years by a factor of 6, I think. So, you know, it's a really hard thing to actually find something that's going to outperform Bitcoin. You know, other interesting projects, perhaps Smart Cash, CMEX, it looks kind of interesting. You get that had a Bitcoin airdrop, so if you'd claimed it in time, you should have some of it for free, and since it's not listed on any exchanges, you probably still have it. But yeah, I mean, it's I kind of see the altcoins mainly as test beds where we're able to experiment with things. For example, we put Lightning Network out on Litecoin before Bitcoin and see that it's working. And then we'll also have cross-blockchain atomic swaps and decentralized exchanges and all types of things like this. So they can be very useful for cutting the audit trails on a particular blockchain or stuff like that. But you know, if they actually get anything useful in production and it's proven to be safe, it'll probably just be rolled out as a sidechain to Bitcoin, or just roll directly into Bitcoin itself, or one and then the other. So I mean, it's really difficult to like beat Bitcoin over a 30, 40, 50 year period.
All right, and Vortex, the same question. Do you have any favorite altcoins, or are you pretty much in agreement with the rest of the panel here?
Yeah, actually, the rest of the panel is pretty much spot on with this. So really, there's two kind of schools of thought that I've come to know and come to see. You have the hardcore Bitcoin maximalists that are just like, waste every other altcoin is a waste of time. So they're hurting Bitcoin by not working on Bitcoin, and so they're really it's a very maximalist type of view. And there's not really that many people with that view anymore. So what the view is, the second view is what the panel's been kind of saying, where there's some of this experimentation going on, right? So we have something like these forks. We have EOS, however you pronounce that was mentioned. So we have this experimentation going on, but what I kind of see is a little bit of both. So I see that Bitcoin is very, very, very difficult to work on. Remember, this is protocol level development. So this is one of the most specialized fields in programming today. So there's not a whole lot of people that actually can physically work on Bitcoin. Any new developer that somebody hires for Bitcoin, for example, Bitcoin protocol developer, takes at least 1 year just to get up to speed on what's going on with Bitcoin, just to get up to speed with the code, to understand how it works, to be able to do very basic small changes. And so what we've kind of seen is that a lot of maybe B level developers couldn't really match that. So but they still wanted to do experimentation. They still wanted to get their ideas out there. So they went out and they made all these altcoins. And so there's really these kind of two opposing views. We need all this experimentation, but hey, we need everything on Bitcoin. And so what we're kind of finding out is that my personal view is that I like all this experimentation going on, all these other coins. For example, like Ethereum and the DAO and stuff, right? I'm glad that happened on Ethereum and not Bitcoin, right? So there's some things that have been very, very good about this. There's all sorts of ideas that people have across the world now that they're all working on this. I mean, this is what I kind of coined the phrase, the global financial renaissance, is really what we're experiencing, what we're going through right now across the planet. Everybody is rethinking money. And so what we're seeing is that there's these top tier altcoins that people can gravitate to try to make more Bitcoin, and that's at the end of the day what people are mostly using these things for, speculation to try to either make more Bitcoin or make more fiat. But at the end of the day, the market's going to choose. They're going to choose the market's going to choose what's most efficient, what is most valuable, and that's what we're seeing. And of course, as everybody has said already, Bitcoin is still number one on that chart.
All right, looks like Michael is the last hope for the panel. If we could pass the microphone down. Do you have any favorite altcoins or smart contracts or privacy coins, or do you agree with everyone else that they're kind of a sideshow or a test net to Bitcoin?
Yeah, no, I don't have any coins I want to pump right here. Like, there's nothing I'm really that into.
No Michael coin yet?
No, that's not coming. The Creep Blitz coin. But here's what I want to say on this matter. Bitcoin is political, very political. Always has been, always will be. As Trace was saying, and as I was saying before, this is not just like some cool little tech experiment. This is going to change the world if it succeeds. If Bitcoin succeeds, it means the paradigm that we've all been born into and lived in our entire lives will be gone completely. And as I quoted on Andy's show the other day, it's like that quote that's falsely attributed to Lenin, which is, there are decades where nothing happens and weeks when decades happen. That's the sort of thing that Bitcoin can make happen in the world we're in. So let's take altcoins in the context of that. I love altcoins. I mean, I'm glad they're there. I'm glad there's tons of them for a few reasons from a strategic standpoint. First of all, it keeps the authorities' eyes off the ball a little bit. It keeps them confused. They don't know what's going on. They're like, well, okay, what are we dealing with here? Plus, a lot of the folks that are doing the other coins and projects, they're not political. They're really not. You know, they might just be techies or like utopians or whatever. And because they're non-political, the authorities are seeing all these other coins and projects and then saying, oh, well, this isn't about, you know, destroying the system. You know, we can make this work with the system. And so again, like, the longer Bitcoin is able to survive and sort of be in the background even a little bit, because there's all this other mess that's confusing everybody, is great. I think that if the altcoin, if there weren't, how many 1,000 altcoins now, if there weren't that many, I'd be way more worried, because then you can have all the thugs looking at Bitcoin and spending all their time concerning themselves about Bitcoin. So I think it's great. I mean, I'm a Wild West kind of person. I think the more craziness that's going on out there, the better. I'm not somebody that's, I do believe that, you know, there should be laws, and if someone breaks the law or hurts someone or steals from someone, they should be punished like anyone else. However, we should really not try to prevent people from making their own mistakes, because that's why we're here on this planet. I mean, we're here to learn, we're try things out, experiment, and if you don't fall flat on your face a few times, then you're not doing it right. So, you know, that's kind of how I see the whole ecosystem. It's like we're figuring things out, we're human beings. The more free we can be, the more we can experiment, the more we can fail, the better. But most importantly, again, you know, Bitcoin is the one that can change the world. And the other, and look, that's not to say there can be tokens that can provide functions that are valuable, right? Perhaps on a blockchain that are really important, but in a lot of cases, those things won't be what Bitcoin is trying to do, which is disrupt and challenge the current paradigm in a very, very core, at a very core level that would be problematic. So yeah, sure. I mean, I think there could be altcoins and other projects that could succeed and do well, and I hope they do, but they won't be challenging the system on the core level that Bitcoin is. And that's why Bitcoin is unique in that way.
All right, and now before we open it up to questions and answers, I'd just like to remind everyone, we do have a pizza truck outside, and we're going to be hanging out after the questions are done. Also, if you'd like a tour of the Grid co-working space, they have offices for both individuals and small startups, and a huge wing that they've built downstairs, so they'll be giving tours of that if you guys stick around. But now, if anyone that's like to ask a question would just line up over to the left, we're going to have a microphone, and we're just going to go through some questions. So, or if there are no questions, I'll keep asking questions, but they'll probably be about movies or baseball, something you wouldn't be interested in. So. Just go ahead and please just let us know who you want the question to go to, and I'll give them the mic so we can work together. So,
I think it's Chris.
So go ahead.
So you have a big focus on proving it, holding your private keys, repeat at the end of the talk. So the assumption is that we're trying to get everyone to use this. We're trying to, you know, get this massively adopted. If that's the view that you hold so strongly, how do we facilitate mass adoption? What methods do you suggest, and how long do you think it's going to take with that method?
Yeah, well, I mean, there's the carrot, you know, with the price speculation. Everybody loves to chase the rabbit. And I suppose there's the stick of the current system being a boat on fire. So maybe what it takes is just enough financial pain. You know, maybe 2007 and 2008 wasn't painful enough. And maybe, you know, as we move into a Bitcoin world, you don't get bailouts because you can't just create it out of nothing. So you know, when we're marking to market these, at the end of the day, we're trying to move a size 50 foot into a size 5 shoe. There's not enough room for everybody to maintain the current asset values that they currently think they have. And as those get marked to market, there will be losses that people have to take because the capital was misallocated at the time that they allocated it. It just hasn't been marked to market yet. So I mean, somebody's going to take the loss. You know, it's just, sorry, just don't be that person. Yeah, I mean, it's just how it is. I mean, yeah, I mean, whoops.
Just one quick thing, real quick. On that question, really, a lot of people ask that question, across chat forums and stuff like that. And really, the best answer that I found is we just have to let the banks fail. They're going to do it on their own with these zero interest rates and negative interest rates now, and the Ponzi schemes that they've built up. People will one day get fed up with it, and things like Greece will happen. Things like Argentina and on and on and on. Right? All these countries, Venezuela. All these things are going to happen, and all we have to do is just let that fail and let Bitcoin catch it all. Pretty much.
I mean, in 2007, 2008, people didn't really have a choice. Now they have a choice. So if they're taking, a calculated risk to remain in the current system, and maybe they just miscalculated, Whereas the people who bought Bitcoin and they have profits, they calculated correctly. And it's going to be just a brutal reckoning, but that's what happens when you have 10,000 years of humanity misallocating capital, and the last 500 years of this great credit expansion that's happened.
So when the layman who doesn't make the right choice, what does that mean? Your middle class person who hasn't made the right choice because they didn't catch the wave.
I mean, they might not be able to afford anything. I mean, we have price controls on electricity prices, and utilities are highly regulated and all of this stuff. And the highest and best use of that electricity might be mining Bitcoin instead of running like a washer and a dryer for clothes. And it'll be people who can afford it that'll be able to pay to wash and dry their clothes. I mean, that's just how the market works. The thing is that we've had so many price controls and interference by the government and forms of economic censorship. And if Bitcoin really is censorship resistant, it's going to liberate these price controls that have happened and this economic censorship. And the market is going to work. Then it becomes a question of whether we're going to be able to be productive or not on the other side of that. Are we going to go down a path of repression like Venezuela, or are we going to go down a path of regeneration like the founding fathers with the Constitution? That'll be a decision that each kind of government, if it even maintains as a government, will then decide. And so, having second passports and things like this so that you can get on a plane and leave if the place you're living at decides to go the path of Venezuela, that becomes a form of life hedge or continuity of lifestyle, a last plane account. But I mean, Bitcoin becomes this place where, no amount of violence is going to solve the math problem. You have to have a private key. And that private key is extremely portable, especially with our current information technology structures. And capital is going to go where it's treated best. So when I'm talking about repricing all the assets, it's going to take into account the solidity of the property rights of that underlying regime. When we're pricing this real estate, for example. And if real estate here just isn't safe, that's going to get priced by the market. Do you want to buy real estate down in Venezuela? Why? I'd rather just send my Bitcoin, And so I mean, that's the type of market behavior that's just, it's going to happen. The current system is just so, they've completely destroyed double entry bookkeeping. And we now have the first practical implementation of triple entry bookkeeping. So we're going to bring a level of corporate governance to the allocation of capital and all these assets with extreme precision, and it's all going to be provable. It's a brave new world we're moving into. You're either going to have Bitcoin or you're not, and hopefully, if you don't have Bitcoin, your grandchild does, I'd take care of my grandparents if they didn't have any. So, family relationships are very important in that regard.
Add something to that? What will drive adoption? The fact is that people in markets are reactive. All the philosophy we talk about here, it doesn't mean anything to the average person in the world. There's two things that's going to make the adoption of Bitcoin grow. One is going to be a tremendous financial crisis, because this time around the banks will not be able to save themselves, and people have an alternative to gold, which they cannot stop. The other thing, of course, is going to be the price simply going up enough that it becomes a force. And in the gold market, they have, because of these derivatives, they have, that and the fact that gold's becoming archaic, they have prevented the price of gold from going up enough to give it to the critical mass that would get the attention it needs. All you have to do is look at what the media was talking about in Bitcoin in December, where it was literally taking over all the financial networks, and even the mainstream was talking about it. That's what governments fear. And in time, I believe that's the more likely scenario, is that it just becomes more and more people slowly but surely start to see this as an attractive asset, and it just gains more and more momentum. And once you start to own it, then you start to learn about it, and you become, look, when I first bought it, I thought it was an attractive investment. Afterward, it became a philosophy. And I think that the more likely scenario is that more and more people realize it's a great investment, and as they get into it, they realize how great it is, and it becomes bigger and bigger, more people have to pay attention to it. And of course, you could have a giant financial crisis, which may or may not happen.
Just wanting to know you guys' thoughts on EOS and like the delegated proof of stake model.
So, just really quick, there really is kind of two ways that people are trying to secure the blockchain right now. It's trying to secure these new financial assets across the world. So one of the ways is proof of work, which is what Bitcoin utilizes, and it's the only proven public blockchain at scale, which is Bitcoin. So proof of work, and then now somebody basically came up with something called proof of stake, where they think that might be better because it doesn't actually burn electricity, and so they say that some people believe that is more optimal. And now they're coming out with crazy new things like delegated proof of stake, and on it's going to go. And what it's all pointing to is that they don't want to do something complex like proof of work, because you cannot recreate what Bitcoin has created. The growth that it did organically from its start to where it is now, the hashing power, the mining network, you can't recreate that again. It was completely organic, and so because of that, people are trying different things and trying these new routes and trying to think that they can be as secure as Bitcoin using these new unproven methods like delegated proof of stake. And so it's a bet you can make, and you can see if that's going to be more secure. But at the end of the day, the only thing that's been proven so far is proof of work.
Yeah, I mean, I'd love to see a multi-billion-dollar blockchain have a reorg attack over the last 6 months of its transactions. I think that'd be a great wake-up call for a lot of people.
I'll ask Mike. Mike, I'm a fan of yours from your blog, and appreciate you being here. But the question would be open to anybody. I'm just wondering, I'm running a node myself, and how I should go about buying Bitcoins to then transfer to the node.
How you should buy Bitcoin? Okay. I got a lot of mine through donations, and then I've bought through exchanges. I've used Kraken. I've used some of the others you've heard of. I don't really have a plan as far as trying to be under the radar, particularly because I'm sort of already out there as a public figure, angering and pissing off all sorts of characters. That's kind of what I do. So I just don't really think I'm the best person to answer that question. I think that if anyone else wants to hop in here and go ahead and do that, they should probably do that. But
well, until recently, you could buy them on local Bitcoins, where you go and meet somebody at a cafe or maybe a bank somewhere safe, give them $20, they give you $20 worth of Bitcoin, but they started doing know your customer as well. So you would have to register with the government, and I suggest that people pay taxes if they have gains and they realize them. So it's pretty much down to the exchanges, local Bitcoins, meet someone on local Bitcoins, make friends, meet someone at a Bitcoin meetup, make friends, but all of those are probably going to be smaller amounts. Most of the people I know that have invested larger amounts generally end up going to an exchange. As much as everyone downplays it, we don't like to use Coinbase and their bank, and you're getting tracked, but that's again, if you're getting tracked, you should pay your taxes.
But I think that one of the things coming up, and I'm no expert on this, but like these decentralized exchanges people are trying to launch, like BISC and stuff like that. But I've not used that. but it might be worth exploring, at least looking into it as an option for the future, because, and this is key, and we all know this, I think, the on-ramp, off-ramp from fiat to Bitcoin, Bitcoin to fiat, should you want to ever do that for some stupid reason, is a huge point of failure. It's a weakness, and it's one we're going to have to deal with. But again, I mean, with that, will be opportunities. We can't expect the system to play ball with us forever. They're not going to. So we need to start thinking about, what are we gonna do if, they crack down harder and they start to say like, okay, well, you banks, you cannot participate at all in this ecosystem. Then what? What are we gonna do? Yeah, it's something we need to think about. And right now, I don't, personally see any obvious solution that's right on the horizon or useful for people.
Yeah, I think this is kind of like the Jurassic Park, life will find a way. Look, Bitcoin found a way to exist and to become a colossus with absolutely no support from the mainstream, and it continues to grow larger. And it's kind of the situation that as it gets bigger, it's going to be harder for the governments to crack down on it. Everyone assumes that, for instance, the SEC can do whatever they want, forgetting that there's only 4% of the people in the world live in the United States, and many of the other governments in the world actually support Bitcoin, and many don't care, and many wouldn't have the means of stopping it if they wanted to. And there will be decentralized ways of transacting it, and there will be new kinds of computer software and transactional software and ways of doing business that are completely different, that are going to come into the fore just the way Bitcoin came into the fore. It was out of nowhere, and it's making a major disruptive change in the world. So I'm not worried about it, and I certainly wouldn't worry. Look what happened. The Chinese tried to stop Bitcoin last year on their exchanges. What did they do? They haven't even shut down the exchanges yet because they realized the pushback was too large. And of course, it just makes something more valuable when you say that you can't have it, especially when you can have it in other parts of the world. So, for now, right now, you buy it in exchange. There's nothing you can do about it. But the more important thing is you get it off the exchange within seconds onto your hardware wallet.
I have kind of a general question relating to a few things that folks said about the idea of altcoins acting as test beds for some of the larger projects like Bitcoin. I run one of the research labs for one of the major altcoins, and as someone who is deep in the math and the protocol logic pretty deeply, there's a few questions I have with that. One of which is that the idea of kind of just taking functionality and kind of patching it in to a larger existing protocol project isn't really something that happens. A lot of these things are deep incompatible protocol design challenges, which for starters is like why many of these coins exist, is to be able to incorporate them. And even for the few that can be adapted to an existing like Nakamoto style consensus blockchain like Bitcoin, we've seen kind of through Bitcoin's history that the large network effects that have been talked about are a hindrance to the ability to adapt and fork to new features. Which, I mean, maybe that's a blessing, maybe that's a curse, but I'm just wondering kind of from the group, since many people have talked about it, is there any kind of general consensus about whether or not what you're describing as this hopeful future of new functionality being migrated from altcoins to Bitcoin, if such a thing can even happen, which is rare, would it happen because of these large network effects you're talking about? I don't know who to direct this to.
How about the second layer solutions? You can build it on top. I mean, I'm not a technical guy or anything like that, but that seems like the basic thing.
Yeah, I mean, we have like rootstock where you're able to port Solidity over.
Right, and I'm not saying that it couldn't happen. But the problem is second layer solutions are not something that's kind of at the protocol level. I mean, one of the reasons that Bitcoin has experienced many of its forks is because of its inability or unwillingness to adopt certain functionality and features. So even deeper beyond the second layer solution, because that's not literally really limited to altcoins.
Yeah, I mean, well, we also
do you see other protocol choices being able to happen in this way?
Yeah, I mean, there's also side chains, in terms of like Bitcoin development process, but another aspect of this is just how we design protocols. We want to design the protocols to do what they do in each of their layers extremely well. So we don't need the base layer to do everything. We can, build additional layers on top of it, and each of those layers can then be specialized for, different use cases.
Sure, isn't that kind of independent of the altcoin question though? Because I mean, the purpose of many of the major altcoins is to try to take many of the things that would exist on a second layer and put them at the base protocol layer level. So how does that interface with this kind of migration idea?
Well, I mean, one is, you know, if you keep the base layer, you want to keep it easy for people to run. So you don't want to have potential patent issues with it, and you don't want to have potential like securities regulation issues with it. For example, you know, if Ethereum were to be ruled in a security, and then, you know, that's going to create a real mess out of all types of things. So, you know, if we're able to compartmentalize and then build in each of the particular, you know, as a sidechain or as a different layer, I mean, I think that's just seems to be a more measured approach in terms of overall conservativeness. You know, Bitcoin's definitely not a move fast and break things type of mentality.
Yeah, nor is it a scaled solution.
I mean, it's a glacier. Like, I mean, it's moving. You don't want to be in front of it for any length of time. But at least that's how I kind of see it. But I do think you raise very good issues. You know, just because stuff gets built over on top of Ethereum, you can't just necessarily port it over onto Bitcoin immediately or even very easily.
Yeah, mathematics is not a Lego building.
Yeah, I mean, I'd say you'd have to do other layer solutions, and I mean, even rootstock has issues because you got to get additional mining support for it and stuff like that. So I mean, but at the end of the day, I think it's great. We have 1,500 of these coins trading on exchanges. It keeps the regulators baffled. I think it's all the better. We're all in the same niche, you know, with the cryptocurrency niche. And I think there's going to be opportunity to carve out different areas in that niche. At the end of the day, I think Bitcoin might, you know, with the 7 network effects, and I think it's going to be a force to be reckoned with, because if you start from the ultra secure, doesn't change base layer protocol, and then you're able to anchor into that with different things, perhaps you could do a Merkle root into the auth return, and now you're hardening, you know, something you're doing outside of that, then you're able to get the security of Bitcoin, but still be doing stuff outside of it. So, I mean, maybe it'll be solutions like that happen. I mean, at the end of the day, we don't know, because we got to experiment and try all this stuff, and it's going to be like life, and there are going to be new species and lots of extinctions, and it's just, yeah, I think it's going to be exciting and fun though. Thanks.
Yeah, just real quick. You know, we kind of saw this play out already, right? In the early days of the internet protocols, we had TCP/IP, we had Gopher, we had various different implementations across. And what happened is that you know, the world kind of decided, we kind of converged on TCP/IP because it kind of got the most market share, I guess you could say, right? Because of the open source nature of it. So I think that eventually we will converge on these ideas of how to design a protocol. For example, keeping everything as simple as possible, logic-wise, at the base layer, and then building layers above that, like we did with TCP/IP. I mean, the amount of things you can do in the browser now. I mean, we literally don't do anything outside of the browser now. So I think that's kind of the future that I see of Bitcoin, is that eventually people are working on these great ideas, but they'll take these great ideas and they will somehow, like you say, it's very difficult code-wise, directly, right, code to code, but they will take these concepts. I think. Yeah, I think they'll take some of these concepts and try to anchor them or try to build them on top of these above layers that is anchored to the world's most secure blockchain on the planet.
Yeah, and I mean, and Bitcoin's going after immutability, right? Like Ethereum on second round of potential bailout, we had the DAO, and now we're going to have the parity bailout. I mean, why trust that blockchain with any significant amount of store value feature? I mean, it could just change on you. And so, you know, that can become, I think, a very worrisome thing for investors if you're looking at, you know, a digital gold use case. If you're looking at something that's going to be immutable and isn't going to change and is going to be secure. I mean, I don't see any other project out there that offers any type of security option that Bitcoin does in that regard.
In what way? What's security?
Well, the immutability. I mean, we have 9 years of market history. It's been battle hardened and tested. We've got proof of work behind it. I mean, even Ethereum, you know, has rolled back their blockchain with the DAO, and then we have Ripple. They rolled back their blockchain in early days. Like, how can you trust? You know, that's really what we're talking about, is a new form of establishing trust for the internet at this like base layer of the protocol, which can then be weaved into a lot of the other protocols that we have too. You know, like at Armory, we were working on weaving into like the DNS records, Bitcoin-related stuff so that you could actually know that you were on Wells Fargo's website or whatever. So I mean, like, the trust, the immutability, it's going to be a foundational thing, at least in my opinion, for building out the protocols.
I just wanted to add. Yeah, I mean, this sort of goes back to what I was saying earlier, which is that I don't expect Bitcoin to be everything. You know, I don't expect it to, you know, solve every single possible problem that a token or a blockchain can solve for the world. So, you know, that's one of the reasons I'm very, you know, totally happy about all of these projects. And I encourage you, you know, you don't have to be a Bitcoin maximalist or be all into Bitcoin, you know, to be into this stuff. But the world we live in, the root base layer of Bitcoin is extraordinarily valuable and extremely necessary. And even if Lightning ends up sort of being a dud, you know, I mean, Bitcoin is still very important to the transition that we're going into right now. And it offers something, you know, like, let's just take, you know, people call it digital gold, whether you like that or not. But the point is, you know, people are seeing it that way. And it does something that gold can never do, right? I mean, we live in an interconnected world, peer-to-peer world in a lot of ways right now, whether it's through social media or whatever it is. And so to be able to send actual money or value from one person to the other, peer-to-peer, you can't do that with gold, right? I mean, if you send gold over the internet, you're sending a claim, you're trusting somebody. So what Bitcoin does at that core level is extremely valuable. Again, I go back to what first got me into Bitcoin in the first place, WikiLeaks. Right? I mean, the powers that be wanted and made efforts to shut it down, and Bitcoin essentially saved it from death. That fundamental use case for Bitcoin still exists and is very important. And you know, because of the network effect, the market cap, the place that it has in the zeitgeist of the world at this point is makes it very valuable in its own right. So I don't, maybe everything will be incorporated into other layer solutions, and maybe not. But Bitcoin, it doesn't change the use case for me or why it's important.
All right, thanks everybody.
Thanks.
Great question.
So this is for anyone. Aside from a possible ETF, how do institutional investors come in? How does Soros buy in?
I'll just take this real quick. Yeah, I mean, anyone that's serious, in my opinion, any serious hedge fund or family office or investor that wants to own cryptocurrencies or Bitcoin would never buy an ETF or CME contract. It's just insanity for all the reasons sort of we talked about earlier. I mean, the entire purpose of this thing is to own the actual private keys. And again, imagine if you own the ETF or if you owned a futures contract and then there was a split and you're not showing that split to your investors. You don't look like, why do I have a hedge fund? Why do I have my money with you? You're supposed to be smart and get me every little ounce of return out of this thing that you can. And I don't see, the ETFs aren't going to do that for you. Yeah, okay, maybe one might do might have done the Bcash split, but you don't even know that. So people, sure, like your mom and pop, a retail person might do an ETF, but no, I don't think any institutional investor, particularly if you're a hedge fund, that is says they have a position in Bitcoin, and then they're telling you that they own the Bitcoin ETF, take your money out of that fund because they are not maximizing your returns and they don't know how to do it.
And from a liquidity standpoint?
Oh yeah, okay, so from a liquidity standpoint, I don't deal in these markets, maybe Trace or someone else can give this, but the big money, as far as I've been hearing, doesn't even use exchanges anymore. It's over the counter. So you're just essentially, it's not quite peer-to-peer, but you're going through a centralized third party that basically knows really wealthy people and then knows who owns a lot of Bitcoin, might be interested in selling it. So that's where it seems like a lot of the real deal transactions are going down, is OTC, over the counter, which I would expect to continue.
Yeah. It's kind of always been OTC. Just functionally though, I think the hedge funds are limited to holding $150 million of assets themselves, and if they hold more than that, it has to be with a licensed and registered custodian. And I think the only option is Kingdom Trust, which was recently acquired by BitGo. Otherwise, the institutional money can't play in this space. They're legally prohibited by it. Maybe they can do the CME futures and the the Bitcoin Investment Trust now, but even the Bitcoin Investment Trust, I mean, you have to hold shares of that for a year before you can offer for sale. So, you know, that's why we get the premium to NAV there. It's just very inefficient for any type of like large institutional money to come in yet.
Yeah, there's a chicken and egg effect going on because institutions, well, for one, you have the political pushback for anyone who's big enough to be mainstream, to be buying big positions in Bitcoin. And then, of course, you have the liquidity issues because you can't buy gigantic positions without moving the market. And then, of course, there's the custodial issues because you can't be managing other people's money with Trezors or Electrum wallets. So all these things, it almost seems like it can't be done, but the thing is, as it gets bigger and bigger, it becomes more liquid, and there's more reasons why people ask why you wouldn't be in it. Again, I talked for a long time about that $100 billion market cap at $6,000 Bitcoin, and you know, lo and behold, once it was hit, there was a big surge of money into it because people are speculating that the institutions are going to come in, and I believe some have, probably smaller institutions, certainly the small crypto hedge funds. But again, it's the same kind of thing we're talking about, life finds a way. As it gets bigger and more liquid, it will become easier to buy politically and regulatorily wise, and liquidity. All these things will come. There's no way you talk about, who was it? Trey said that, you know, the biggest issue was that it got to $100 because it was that beginning, getting over the hump. And we've done that on a retail basis. We're just getting to the point where it's going to be the institutions which are figuring out ways to get over the hump. They're pushing and probing. We're over $100 billion market cap. We saw the first wave come in December and January. It was awe-inspiring. We saw a tiny bit of it in the past week or two. The fact is that as the network gets stronger and bigger, and the competitors in the financial system and all the other issues that we're dealing with politically and socially around the world cause more and more momentum behind it, the institutions will find ways to get in, whether it's in exchanges or over the counter or other ways of trading that haven't been invented yet.
Hi. So over the past couple years, I think the biggest threats to Bitcoin that we've seen are this idea of altcoin flippening. There was a period where people thought that Ethereum or Ripple or some other coins would overtake Bitcoin. And then the other big thing we've had, I think, is the miner centralization thing, which resulted in this hard fork due to one company controlling a huge part of the ASIC manufacturing. I think now we are past those challenges, even though they still exist, and no one really thinks they're a serious threat to Bitcoin. The one thing I do worry about, that's kind of a good thing though, you heard the phrase of wealth redistribution, and I'm afraid that if Bitcoin does reach its full potential, we see a massive wealth redistribution in society. There'll be a backlash, and governments will try to blame the financial collapse and chaos from this disruption on Bitcoin people, and Bitcoin holders will organize pogroms against them, try to confiscate their wealth or everything else. So do you think this is a real threat? What should we do to prevent it? If we can't prevent it, how should we protect ourselves?
Well, there's two ways of looking at it. Yeah, some governments are going to be reactionary in that way, but then there are going to be some governments that will have been buying Bitcoin all along, and they will be benefiting. So they're not going to go after, they're not going to let that happen in those countries. So if we get to that scenario where Bitcoin holders are being persecuted in one country, they should just go to the countries that have already benefited from Bitcoin. I really think not only are there going to be some elite individuals, but there are going to be some elite countries. And we haven't seen anything yet. I mean, there will be jurisdictions that are very Bitcoin friendly, where Bitcoin refugees can go to if there ever are pogroms against Bitcoiners in certain countries.
Yeah, you know, it really, I think it is on the back of everybody's mind here. There's a reason why nobody knows my real name, right? Like, there's a reason why I go under the pseudonym Vortex, because there very well could be a large prosecution of kind of things in the future. But as Adam mentioned, I'm totally on Adam's side, where there's going to be a country, and plenty of them, that will be accepting of Bitcoin. It will not just be this entire world government thing against Bitcoin, because one person's problem raises another person's opportunity. So this is, it's going to play out again over decades. I don't think we're going to see any type of overnight ban or anything like that, but you will see countries like Venezuela and such continue, and even, we just saw President Trump do some sanctions on the Venezuelan coin, right? We're going to see these little things, but these problems could happen, but I just wanted to assure everybody that, at some point there will be plenty of other people with Bitcoin, and they will provide a way for us to get through it.
Yeah, that would be what we call a high level problem to have. That Bitcoin is doing so well that the governments are mad at you for being wealthy. First of all, they'd have to find you and know who you are, because that's the whole beauty of Bitcoin. It's unconfiscatable and uncensorable. I wrote an article back. People used to ask me all these questions about gold back when gold mattered. I wrote an article in 2011 or 12. You can Google it. It says it's called Priceless Precious Metals versus Worthless Dollars. And that's always my answer to all the what if questions. What if they ban it? What if they windfall profit taxes? What if? Well, what that would mean, since governments are reactionary, is that you've already won. That means that what you have invested in gold for has come to pass. You may not be happy about the way the world is, but you invested in gold expecting that, and it becomes so valuable that the governments don't know what to do. And so you're saying, what would happen if Bitcoin took over the world and it was worth $100,000 a coin? Well, I'll take that high-level problem and deal with the consequences. Of course, as Adam is talking about, this is not gold. You can't take it away. And there is no cartel of governments that are all together trying to stop Bitcoin. Governments don't even know what Bitcoin is, let alone to stop it. And some of them are going to be pro-Bitcoin. Some of them don't even care about Bitcoin. Some of them, in fact, I would bet all the third world countries will be pro-Bitcoin, most of the second world countries, and probably some of the first ones, like, say, Japan, who has the biggest debt in the whole world, and to me is probably a buyer right now. So again, I don't worry about what will happen if Bitcoin succeeds. My worries were what would happen if Bitcoin fails. Those last year all evaporated with the scaling debates. I have absolutely zero worries that anything will stop Bitcoin from succeeding. It's just a matter of how fast.
Okay, just want to make a few points. First of all, if you're asking like what I would think the next attack would be if there is one that's common going forward, I think it's what we discussed earlier, which is the fiat on-off ramps. And because that would really scare a lot of people that are sort of in it to make a bit of money and then sell it, or need to sell it to, let's say, have most of their wealth in Bitcoin and then need some money every now and again, fiat. Because if they essentially like made it illegal for banks to participate, right, be an on or off ramp, then people that have a Bitcoin position could get really concerned. Okay, well now that's all my money is in there and I can't get it out, and that would cause a bit of a panic. Now, that's definitely not a fatal thing. That's something that'll get worked around. Again, you find a way, and it's probably coming to some degree in certain countries. That sort of a thing. I think India maybe even there was some rumblings about that. But the other thing is, look, you get protection by making sure other people understand how important this is and getting people involved in it. Like in South Korea, for example, they were looking to push back hard with regulation, and the actual outrage from the public forced their hand to slow down a little bit. So we're led to believe that these people and go into fancy chambers and have called your honor and all that are all powerful and can do whatever they want, but they actually do. Again, they use propaganda and they try to fool us because they do need our consent to some degree. And if there are enough people that are again infected with the wondrous disease of cryptocurrency, it's going to be very, very hard to stop this tidal wave. And so that's what I think how we need to be looking at it.
And maybe also, if you have the money, then you can have a private jet, pay lawyers, that kind of thing, if they're rich enough to worry about that. Well, I've heard it said a lot that Bitcoin cannot be everything to everyone, but I wanted to get some we've got Lightning Network that came out, which can do day-to-day coffee. even micro transactions, possibly streaming for insurance or whatever, car insurance. Every time you start it, then you pay insurance. I mean, whatever. There's lots of different things. We've got things similar, or Wimble for privacy. We've got Mask coming up for getting smart contracts. And although there are technical challenges, I kind of want to hear mainly from Vortex and Trace, but anyone who can add to it. Someone even built a security on the Bitcoin. So I wanted to see some of the excitement. I'm really excited, although it might be years, but is there your thoughts on the excitement of these new developments where it can be a lot more than what typically think Bitcoin would be?
Yeah, okay, I'll just real quick add my 2 cents on that and then pass the mic. I was gonna make this point actually the last question, so it's perfect that you said that. This is part of why I get excited about Lightning. It's not because there's a particular thing that I expect to be built on it, but because of the potential for who knows what to be built on it. And I think that'll actually provide us with protection. I think the Lightning layer and layer 2 will provide Bitcoiners and the ecosystem with political protection. Because if that gets going and it starts to infect more people in their everyday lives with things beyond the digital gold, right? Because now that, if we only have, it's true, if we only have the sort of digital gold use case and things go bad, we don't have that sort of protection from the utility that another layer can offer masses of people. So I think that's key. I think we want to get that, and we want to get that fast, because the more people that are touched by Bitcoin, probably on a second layer, the more it becomes unstoppable. Because the more lives that are being affected by Bitcoin in a positive way, the more you can never ever shut this thing down. It becomes political suicide.
Yeah, I mean, that's the fit network effect of the developers. General Maxwell has hundreds of them, the brightest ones out there. So anyways, that's kind of that. But the head can absorb no more than the tail can endure. Are we done now? Thomas?
I got one more, I'm afraid.
Just real quick, I just want to comment. I mean, because there just is so many exciting things coming out for Bitcoin, because a lot of people, like I said, are doing this additional experimentation on other altcoins, thinking that maybe Bitcoin is standing still. I've heard a lot of that comment saying Bitcoin is, we don't move fast and break things, but nevertheless, there is years of technology yet to come that's currently being worked on with Bitcoin. From everything from smart contracts, like they mentioned, with something like Mask, Merkleized abstract syntax trees, right? It's hard to say. These type of things, they're all coming down the line. And Lightning is now launched public on beta, doing live transactions today. This is Bitcoin's scaling solution. So in addition to that, how many other things we got? We got simplicity. Simplicity. So this is going to be really, really amazing, because right now, Bitcoin scripting is pretty difficult and limited. But with this higher level language of simplicity, we can do everything way, way easier and way more efficient. And specifically on the smart contract front, we can have security and reliability that Ethereum and other type of smart contract chains can only dream of, because we are actually doing it right from the start. Instead of having a problem and maybe throwing everything we had at it, we actually spend years. There are protocol developers and cryptographers that spend years on working on these problems. And simplicity is an amazing example of what's coming down the pipe for Bitcoin. This is revolutionary, because it is a whole new programming language that we will be able to create a whole new utility out of Bitcoin that we could never even imagine before. So maybe I have some more traits, but that's kind of the big ones for me. That's the big ones for me.
Appreciate it. So I'm the last one. No questions on Bitcoin. This is more in regards to the major problem that I'm blessed to be a part of, in regards to a team that has identified the on-ramping and exiting of the space. We can all agree that it's not that easy to enter and exit the space, right? So what we're working on currently is helping facilitate bigger broker deals in the Bitcoin and blockchain market. That way there's like a dashboard that can help identify and vetting buyers and sellers, which helps the blockchain grow and be more efficient if people can enter and exit the space. It's one of the biggest problems that I've seen for people that hold large numbers of Bitcoin, like million or 100,000. Like, they have a huge issue in that space, and I feel like it's hindering the space. So it's something that we can make better over time. So in regards to like some of the on-ramping problems, it's something that data companies right now are focused on to help facilitate, to be more efficient in liquidity for everybody involved in the space.
Is there a question?
It was more of a statement because I heard it and I was like, man, I gotta let these guys know.
Okay,
Passionate people, that's what we like.
Yeah.
Well, I would agree with him that onboarding and offboarding is a serious problem, and it is where the regulation will come. So if they do regulate, but we're kind of out of time for questions. Maybe you can ask someone directly after the thing. So I just wanted to thank the Meetup organizers for having us here tonight, and thank the Grid for hosting us. And yeah, we'll be here after. You can ask us questions, and thanks to the panel, thanks to everybody at home. Be sure to give us a thumbs up and a share. Bye-bye.